Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this video, we are going to be discussing the 2-bar reversal indicator. Alright, the 2-bar reversal indicator. I'm just going to write the name of the indicator here for the purpose of clarity. Okay, so this is the indicator we are going to be discussing in this video. It's actually designed to detect the 2-bar reversal candlestick formation. Okay, and it's a key signal of imminent trend changes in the market. All right, I'm going to add the indicator to the chart right away. It's a custom indicator, so if you want to make use of it, you have to download it from an external site before adding it to your indicators library for your MetaTrader terminal. Now, as we can see, it's a very straightforward indicator, very straightforward. It gives you signals with arrows. All right, you have a red arrow pointing downwards above the candlesticks, indicating a sell signal, and you have a blue arrow pointing upwards below the candlesticks, indicating a buy signal. All right, so whenever you get a sell signal, ensure you get confirmations. All right, for example, look out for a possible bearish candlestick pattern. Whenever you have a red arrow pointing downwards above the candlesticks, ensure you look for a bearish candlestick pattern and check if price is around a resistance. As you can see here, price was actually around the resistance. This was a rejection, 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 again rejection. So this is a resistance zone, and the indicator gave us a sell signal around that resistance. So that was a great point of entry for a sell trade, right? So after entering a sell trade, an ideal place to set your stop loss would be above the swing high. All right, you can actually decide to set your stop loss above the arrow itself. Okay, that's a good place to set your stop loss, above the arrow itself. And then for your take profit, you can decide to wait for a blue arrow to form, which is going to be a buy signal, but you're going to use that buy signal as your exit strategy for a sell trade. Or you can just decide to use support zones, right? You can use support zones to exit your sell, okay? Or rather, you can just set your take profits at support zones. At the same time, you can be watching out for when the blue arrow forms. So whichever one happens first, you are good to go. Ensure that you always have good risk to reward ratio. For example, if we are risking about 200 pips, ensure that your target is a minimum of 400 pips. So in this case, we are risking about 230 pips, right? So we should ensure that our profit target is not less than 460, right? There's 230 times 2, not less than 460 pips. So this would have even be a good place to exit if we had a reversal here, but we did not necessarily have a reversal here. This was just more like a pullback. What we had here was just more like a pullback, right? And then a continuation. So always get confirmations before you exit your sell or before you exit your buy. Basically, before you exit your position, always get confirmations. All right, so use support zones or wait for the arrow to form, the blue arrow indicating buy signal, before you exit your sell trade. Now let us look at buy examples, right? For buy examples, watch out for the formation of the blue arrows beneath the candlesticks, and better if the arrows form around a support zone. For example, in this case, we can see that we got a buy signal around here when the price was just bouncing off this support. So that was a good place to enter a buy trade. And after doing that, you can go ahead and set your stop loss right below the arrow. Just similarly to the case of a sell trade, right? You can go ahead, set your stop loss right below the blue arrow, and then your take profit level can be at resistance zones, or you can wait for the red arrow to form above the candlesticks to indicate a sell signal, and that sell signal is going to be your exit strategy for a buy trade. All right, so had it been we had entered a buy trade around here, this point, okay, let's say this point, because it's ideal you get confirmations, right? And one of the ways to get confirmations is by looking out for chart patterns or candlestick patterns. So we had a bullish engulfing right after this blue arrow form. You can see we had a bullish engulfing pattern here. So we would have considered entering a buy trade right after the bullish engulfing pattern. and after entering a buy trade, you can set your stop loss right below the arrow. Okay, after setting your stop loss, then you go ahead and set your take profit at an appropriate level. Resistance zones can be good places to set stop take profit. So this was a resistance zone, and now if we are to measure our risk to reward ratio, we'll see that we have a good one, risking about 2600 points, right? About 260 pips to make somewhere around 8,000 points. That is about 800 pips. So it's quite a good catch, right? Ensure that your risk to reward ratio, it's a minimum of 1:2. Okay, a minimum of 1:2. For example, if you have 5 winning trades and 5 losing trades, even if you have equal number of wins and losses, you are still going to be on the winning side. Because imagine if you are risking $10 per trade and you lose 5 trades, that's going to be a loss of $50, right? And then if you end up winning 5 trades, that's going to be a win of $100. So at the end of the day, even though you had losing 5 trades and winning 5 trades, you will still be in a $50 profit. So that is the importance of having a good risk to reward ratio. It's beneficial in the long run. Now, in addition to the support and resistance zones, I'm going to recommend making use of trend lines. Trend lines are also going to come in really handy because they can show you dynamic support and resistance zones. As we can see, when you make use of trend lines on your chart, you are going to find some resistance levels that are changing along the way. So whenever you get a signal, for example, you can see we had a signal around here, right? And right above this point, the trend line was serving as a dynamic support. So that served as an extra confirmation, all right? So the confirmation from this trend line should have given you even an extra layer of confidence to go ahead and enter a buy trade. So we had a confluence around here, right? We have talked about confluence in previous videos. You might want to check that out, right? So we can see that we had a buy signal from the 2-bar reversal indicator. We also had a bullish engulfing pattern around here. At the same time, we had price bouncing off this trend line support. And at the same time, we eventually had a, I will call it a breakout because it's kind of a resistance zone that we have around here. It's kind of a resistance zone, although the zone is wide, right? The zone is wide, but it is actually a resistance zone. As you can see, there was rejection here, rejection here, rejection here, rejection here again. So there was a resistance zone around here. So and the price successfully, as you can see that the price successfully went past that resistance zone. So if you had entered a buy trade around here and you notice all this bullish price action, it will have given you confidence to remain in the trade, all right? And then you can exit when the price gets to another resistance, or you get a sell signal from the 2-bar reversal indicator, and then that would have been a great place to exit your buy trade. All right, so that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading.